going on, guys? Bexio back, and today we got a brand new video, this time talking about what could the top stocks of 2022 look like, and what is my list looking like going into 2022. So these are going to be top stocks that I think are going to perform very well, have a good looking future, and 2022 could be an overall good year for them. So first off, before we get into that, if you are not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But the first stock we're going to start with is going to be a relatively safe one, and that is going to be Apple. Obviously, really can't go wrong with Apple. These guys, money printing machines, had a massively successful year. Even just looking at their Weeble charts here, it has been massively good to be in Apple. Just look at that rally up, everything looking very good. But the problem going in 2022, the growth, was it too much last year to be able to be matched and exceeded 2022? I think they're figuring out a way to get around it with this new iPhone, everything they got going for them, and it is Apple. They're the most valuable company in the world. Betting against them, not something anyone really wants to do, and they just have a great track record, and I think 2022, they're just going to continue to explode on growth. They're going to continue this insane movement. So even looking at Apple for this past year, 34% from Apple, better than the indices, the index, the S&P 500. Apple performed very, very well. I mean, you extrapolate this out to 500% for the past 5 years. You just truly cannot go wrong with Apple, and that's why it's the safe pick. It's just one that is just such a good company, keeps moving forward, keeps growing, and they just seem to know what they're doing. So this is especially a big pick for someone who is starting their portfolio, who doesn't have a bunch of money invested, who is just getting started. Maybe they just want to, are first expanding away from index funds and things. That would be, going into the blue chip stocks, these big guys that just know what they're doing, print money, and just very successful. Apple is that company for you. So the second one I was going to save for last, being the indexes, the S&P 500, VTI, VOO, those are like the most popular ones. Vanguard, these are something that you really get started investing. The backbone of your portfolio should be built on these index funds, then branch out to blue chips, then branch out to a little bit more risk on that risk curve. But the reason that I'm not saving them for last is because we're starting with these safer guys first. So we can see this is the S&P 500, and these companies, you see massive green. So the whole index doing very, very well, but you could have got unlucky getting something like a PayPal, Disney that's gotten battered down, Verizon, AT&T, even, Amazon underperforming this index. You could have gotten unlucky hitting kind of a company that's very good, but in the short term stuff is actually negative yielding. So you kind of want to start with that massive VTI, VOO, S&P 500, the index, to build that backbone, because not only do you get exposure to all of these stocks we see right here, you also get less volatility. So you don't have to worry about your portfolio going down 10% in a day. Worrying about this stuff, especially when you're just getting started, is very important to be able to not have so much volatility when you're just getting started and not get disencouraged because of some negative days, maybe even negative weeks and months, and that pushes you away. So we don't want to do that. So index is going to be number 2. They are very, very good, especially when you're just getting started, especially because picking individual stocks is not something that's been statistically successful over a period of time over index. And thirdly, we have Disney, Walt Disney. Obviously, we just saw that company actually down for the year by almost 11%. They have gotten battered down, and they're more of a recovery play in a lot of people's minds. And I think that's why the stock is so down, and why it's such a good upside potential for 2022. So we see Disney stock here for the year down 12.5%. Absolutely ridiculous stuff. And it is because of the fears of their parks closing down, not being able to generate the revenue, and Disney's parks and recreational parks being the reason and the sole driver of massive revenue to Disney. But that is changing, because with their launch of Disney Plus, Disney has completely changed their game and I do not believe that it is priced in whatsoever. You can see right here, Disney Plus launched 2020, less than 2 years. They reach 100 million paid subscribers. They're growing at a much faster rate than Netflix is. Even Netflix over a longer period of time, obviously, but they are explosive in growth. And in the same time period where Disney Plus launched and got 100 million paid subscribers, Netflix only added 41 million. So, is there a time where we see Disney get more subscribers than Netflix? And I don't think that that's a out of the possibility type of thing, because Disney's super successful and has lots of diehard fans who love Disney content, and that is where they got their first 100 million subs and why their growth is so quick. And you just compare Disney to Netflix, and this right here, their market cap $276 billion compared to Netflix, which is a $272 billion company. So Disney slightly less valued than Netflix. However, they aren't only a streaming business, and Disney has a lot of things going for, like Disney Plus. It has ESPN Disney owns. I think they might own Hulu. They have a lot of these streaming services that they do have access to, as well as the live sports deals and sports deals in general through ESPN and all of these things. So Disney has a lot of things going for them. And with Netflix being 272 billion, and then Disney only being worth 276, so it's actually slightly worth more than Netflix. So slightly worth more. But if you take into account that Netflix is only this streaming business, they haven't really branched out to too much other stuff compared to Disney has that streaming business on top of their park and everything that's going on. Once those parks start to generate revenue again and people get those fears out of their mind saying like Disney needs their parks, once their parks start going back into full operation and things start returning, people are going to see how much value Disney really has, and it's going to be a explosive rally for Disney once people realize that this Disney Plus thing, it's going to be a cash cow. And then the next stock we got is a channel favorite, Plug Power. You already know we had to put them on this list. 2022 is going to be a massive year for Plug to see if they can execute their growth strategy and continue growing revenue, continue growing their kind of infrastructure, and start producing and delivering hydrogen as a fuel to some of these other partnerships and players that they've got in place. So Plug Power also on this kind of yearly thing here, where it is actually down for the year, or slightly like around it's down. So $35 from December 21st, 2020 to the $28 currently. It is down for the year, but it had massive growth, volatility, everything going on during last year, 2020 and things. But the 2022 looks amazing for them. Their partnership should be shaping up. Everything going for Plug is going to shape up in 2022. We're going to get a much more refined version of where this is going, and put into perspective that 2024 date, which is massively important because that's their profitability date. If they cannot reach profitability by 2024, we have a massive problem, and we'll have to reevaluate a lot of things because that'll change the fundamentals of this company. But 2022 looks pretty bright for them. I think they're going to start to accelerate this growth. Their infrastructure they built during 2021 is going to start to put to work during 2022, and we're going to see a lot of expansion from them. So that's what we want to see, and I think it's going to lead to some good growth for them. And finally, for the last one, not a stock, but something I think a lot of people should have on their radar and incorporated into their portfolios anyways, is Bitcoin. This is something that I think you need to have incorporated. You got to have at least a little bit of exposure to Bitcoin because it's just such a massive asset class that's erupted, and it looks like the adoption, everything going forward is going to be so good. But you get that on both sides. You're going to get a massive amount of people who are super bullish and love Bitcoin, and you're going to get a massive amount of people who are super bearish and hate Bitcoin. So this one may be a little divisive, but I think that a lot of people need to keep Bitcoin on their radar. So we can still look at the growth for Bitcoin for the year. We'll go to weekly, and you see January 2021, it was something around $27,000, and we're still $20,000 higher than that about 60 something percent on the year of gains, which is incredible. And it's still off of a very big downturn from all-time highs where people are massively scared right now. So to say that at $48,000 people are worried and scared compared to where it was 29,000 during the previous crash, it's just so many things going for Bitcoin. Countries are now adopting it. Companies are starting to adopt it as well, putting it on their balance sheet. I think we continue to see this massive growth in Bitcoin for not only companies putting it in their balance sheet, but countries adopting it, as well as we might start to see Bitcoin transactions on the Lightning Network and companies accepting Bitcoin as payment. That will completely change the game. And obviously a spot Bitcoin ETF whenever the US decides to start getting on track and actually doing something instead of continuously falling behind. That is my list for these top stocks and investments that I think going into 2022 have massive upside and massive potential. Obviously, Apple and VTI or the S&P 500 index, very safe bets. I think Disney is still a safe-ish bet, but it depends on recovery and people actually changing their mindset and realizing that this Disney Plus thing is going to be massive, is already massive, and will bring in a lot of revenue and open up a new cash cow for Disney apart from just their park recreation stuff. And then plug channel favorite. 2022 is going to be an important year to see how their growth, distribution, and everything is starting to go for them. And another channel favorite with Bitcoin. Everyone's got to have Bitcoin. Come on. Stop sleeping on Bitcoin. Make sure you just put 1%. If you hate Bitcoin, just put 1% in there and see what happens. If it goes to zero and you lose 1%, not a big deal. But if it starts growing, that's when you'll start looking at this thing and start actually looking into it and seeing that it might be a bigger deal than a lot of people are putting on. But as always, guys, that's going to do it for this video. Don't forget to smash that like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.